And Mr. Stivers is here and is recognized for 5 minutes.
Thank you, Mr. Chairman. My first question is for Mr. Niederauer. The purpose of exchange, or the benefit of an exchange to the entire system, is to provide price transparency to the entire market. Is that correct? One of the benefits.
That's what we aspire to do, yes, sir.
And even if shares are traded in dark markets, the exchanges provide sort of goalposts or left and right limits for people throughout the markets to know what the alternative price would have been. Is that correct?
The public market quote that I referenced in my opening in my oral remarks, the so-called NBBO, is typically used as a reference price for those opaque markets. Yes, sir.
And so I guess, you know, the beginning point here is that even though there is some opacity in part of the markets, the exchanges are there to help everybody understand what the alternative price would be, and so it's very publicly known what the alternative would be. Is that correct? Yes, or incorrect?
Yeah, we actually have an obligation to publish that bid and offer at all times with an associated size. And so yes, sir, that's correct. And we think that if the customer experience were better in the dark pools, as I alluded to a minute ago, then there's no argument from our point of view. When it's clearly better for the executing broker, but it's less clear that it's better for the customer, that's the only issue we have, really.
Can you help me understand from your perspective on the New York Stock Exchange, what have your volumes been over the last couple of years? Has this rise in dark markets been at your expense in volumes, or I thought your volumes were continuing to go up?
Yeah, until the last 6 months of the market, so really the first 6 months of this year, when we all see, for all of us in the business, the volumes are lower, which I think gets to the confidence issue potentially. Volumes in the overall market have gone up. That was a pretty steady increase after decimalization, and with the advent of some of the technologically enabled trading strategies, volume has generally increased. If you want to measure it by market share, the market share has gone down in the transparent exchanges at the expense of the opaque venues the last couple of years, and in the last 6 months, I think volume is down for everybody relative to the last few years.
But is there anybody on the panel, and you can just raise your hand on this one if you disagree with this, that believes that the dark markets have actually done anything to reduce the efficiency of the marketplace or reduce liquidity in the marketplace? Because they've increased liquidity for sure, right?
Yeah, I think competition generally increases liquidity. I think we focus more to the first part of your question about how much of that is displayed, because the regulations that we put in place, let's put decimalization aside, that was for a different reason, and that was really why spreads went lower and volume went up. It was the advent of NMS 6 or 7 years ago that was designed and hoped to encourage the display of liquidity in addition to fostering competition. I think it certainly fostered competition. I'm not sure it led to more displayed liquidity.
Can I just comment from an institutional perspective on that? So as we talk, institutions obviously represent retail investors, and whether it's the self-directed guy who's buying 100 shares with Tom's firm, or it's somebody who invests in a mutual fund, they both deserve the same positive outcome. So from an institutional perspective, when we have a big order, maybe it's 500,000 shares, maybe it's 5 million shares, there has to be a recognition that when we take that order to the market, there are a number of participants, probably including some in this panel, who would like to know about that order and could take advantage of it. So we need to be able to protect those orders. Dark pools, as originally conceived, were ways that we could go into the dark, interact with other large intermediaries, and get big-sized trades done. Now, clearly the market has more...
And I do want to, if I could, I do need to get to one more question, so I hate to cut you off. I really apologize, but I'm limited on time. The other thing that I'd like to quickly discuss, I worked in a broker-dealer a long time ago, and the whole rise of market makers, and a lot of this was for the small issuers, and so I do want to talk about the impact on small issuers of the rise of dark markets. And I know on a lot of the exchanges, including the New York Stock Exchange, you have to meet certain qualifications to get listed, and so I'm out of time, but maybe there'll be a second round of questions where we can talk about the impact. I know it's come up a little bit on small issuers. Thanks, Mr. Chairman. I yield back,
And thank you. The gentleman yields
hopefully there's a second round.
Gentleman from Arizona is recognized.